Hello traders, and welcome to NOFT's Weekly Market Compass, where we help you navigate the week ahead. Our Weekly Market Compass is brought to you by our head trader Troy, who in between assisting traders in taking the next step in their careers, provides weekly and daily guidance in our live trading room every single day. Before we get into this week's guidance, we need to remind you that trading does carry significant risk, and all information in this video is just provided for educational purposes only and is not an offer or recommendation to trade future stocks, options, or Forex. From everyone here at NOFT, good hunting out there and happy trading. Here's Troy.
Looking as the outlook for the entire week, again, I'm on forexfactory.com on their calendar tab. You can see that I've got Monday today, February 26th, and we have a red item here, a euro. The ECB President Draghi speaks. This should be interesting. We should see a pop in the euro, either up or down, depending on what he says around 9 o'clock. So be careful if you're trading the euro and or even somewhat dollar-denominated currencies as well should also spike up or down based on that information. We also have one of my favorites at 10 a.m., the new home sales. Although this is not nearly as important as starts or building permits, it certainly is a good number to pay attention to. And that's pretty much all we have for today. But looking ahead on tomorrow, on Tuesday, again, we have a couple of red items at 8:30. We have durable goods orders month over month, and the new Fed Chair Powell testifies in front of Congress. So that should be interesting as well. His prepared remarks will be available prior to 8:30, but there's always the possibility that when he's testifying that someone asks him a question and he sheds new light on the economy, so we need to be aware that there is a potential for a spike in the bonds markets as well, depending on what he has to say to Congress and what his answers are. We also have at 10 a.m. The consumer confidence, very important. As you guys know, a large portion of the U.S. economy is based on the consumer. So we always watch the consumer confidence. This is not only an immediate effect on the markets, but it also has a longer-term effect if we see a trend establishing where consumer confidence starts to go down. This is not a good thing. The only other red item we have is New Zealand dollar, the business confidence. If you're a 6N trader, that's certainly of note. Otherwise, not a lot going on Tuesday. Jumping forward to Wednesday, the only red event for the U.S. is the preliminary GDP. Again, always a big news item for GDP, quarter to quarter. I don't really expect much. You really have to see a big miss for this to really make a difference. So plus or minus 0.1% is not going to make a huge difference. But if we see something more than that, you can certainly see the market react. Also at 10:30 on Wednesday, back to normal. 10:30 Wednesday, crude oil inventories is always good for some increased volatility. I believe last week we were under expectations substantially, and basically crude went up about $2 over the course of the next couple of hours. So you get a lot of volatility that comes in around that. Then we also have at 7:30 for the Aussie, 6A, for you 6A traders, private capital expenditures quarter on quarter. Jumping up to Thursday, March 1st, new month, we have at 4:30 in the morning for you guys who are overnight traders. Pound has manufacturing PMI. This is an interesting number. It sort of lets you know what's going on from a manufacturing perspective in Great Britain. With the Brexit stuff going on, there's been a lot of concern about manufacturing and exports based on the trade treaties that are currently in place that may be going away with the Brexit. So this could have a big spike for the 6B. Otherwise, not a lot on Thursday. We have some yellow items: unemployment claims, personal spending, core PCE for the U.S. Those are all orange items are medium impact. Again, not too concerned about these items unless there's a big miss. So you still want to make sure you are aware of the time. Like for unemployment claims, if that happens to be a big miss, that will affect the market. Same with personal spending, but you're looking for a pretty major miss. Otherwise, not going to make that much difference. 10 a.m., Fed Chair Powell testifies again at 10 a.m., so be very aware that he is speaking. And keep in mind that the question and answers section of that is where the danger is, that he may say something that hasn't previously been divulged. I also have ISM manufacturing PMI. Again, good measurement of what's going on in manufacturing for the entire U.S. Construction spending also, even though this is a low one, this is one I follow. I'm looking for big misses. If there is a big miss, construction spending is a huge driver of the economy in the U.S. Jumping ahead to Friday. Friday we have a few red items. None are U.S. Great Britain, Prime Minister May is speaking. That's somewhere between 3 a.m. and 4:30 a.m. And the construction PMI is also coming out at 4:30. So you guys who are overnight traders, you need to make sure you pencil in. That's a dangerous time to be trading the pound when those things are going on. Also at 5 a.m. you have Bank of England Governor Carney speaks. Moving across the Atlantic to CAD, the Canadian dollar, 6C, GDP month to month. This is always a big mover for the CAD, especially if we get something that is unexpected. So watch that. 8:30. Then we don't have anything till 10 a.m. and there's some minor stuff. University of Michigan numbers, consumer sentiment, and inflation expectations come out at 10 a.m. on Friday. Again, these are medium to low impact, but I think that these are very interesting on a macroeconomic perspective as to what's going on longer term for the U.S. economy. Again, customer sentiment extraordinarily important. Inflation expectations also very, very important. Again, these are more macro-related numbers, but still of interest, even in a short-run day trading application. Let's go ahead and look at some charts. Move this around. So a little bit longer term, looking at the crude oil, we have continued to bounce off of this support area back in here from December. We bounced off of that and coming up. One of the interesting things I like to do on any kind of bounce is put a Fibonacci retracement from that high to that low. And you can see we have gone above the 61.8 Fibonacci. We're coming back to it. Now this is sort of an interesting spot because this would be a potential bounce spot to continue to go up, or if it breaks this, then we could definitely see a resumption of this intermediate trend. So from a long perspective, I'm looking above the VRL here. If we can get above that VRL to this, maybe a short, right around 64. You see there's a low volume spot right there. 64 would be on my target for potential short. Potential long, I might wait until it gets right down into here, about 62.50. Right around this little area right there. The big picture on oil is that the Olympics are over, so maybe we'll start seeing some more movement in oil as the geopolitical scene changes from all eyes on the Olympics to all of the little petty stuff that the geopolitical people look at, which is everything from somebody fussing in Saudi Arabia to Iran doing some sort of nuclear thing. So as well as North Korea, all of a sudden our vision is going to shift to those things, and we will start getting more geopolitical risk coming into the market now that the Olympics are over. But from a supply perspective, there's plenty of supply up here. I would say that crude oil has not been following the supply matrix. In other words, that the supply is not creating is not affecting price like it should. I think we have plenty of supply up here, and I have been bearish for quite some time on the overall picture of oil. Again, when you look at U.S. fracking, U.S. frackers absolutely love the price anywhere above, I think it's about $52 a barrel is where they are profitable. So they are just cranking it out. And of course, that means that we are absorbing more of our own oil and less of Saudi Arabia's oil or anybody else's. We're importing less. In fact, we are a net export country as of right now, and I think that will continue. This is going to affect bigger shifts in oil production. Especially above that magical 52 number. Fracking is very profitable. We're going to continue to see that. So from a supply matrix, I think we're overvalued. That being said, you've got to trade it day to day, what it gives to you. Gold is also what we look at for geopolitical and fear and greed within the market. We have seen a rise in the December through mid-January, and now we're sort of chopping sideways. I actually kind of expect this to continue to go sideways until we get more information about the North Korean situation, where they're talking about wanting to talk to the U.S. and then a lot of rhetoric's going to go back and forth, and as those saber rattlers start working their magic, we'll see fear and greed and sneak into the market, and you see that in gold. From a long perspective, anywhere around this low volume node value, VRL here at 1329 is where I'd be looking for a potential long. Shorts, I think I'd look up here to this VRL at 1344 as potential for short. The bonds have continued to do what we expect them to do with the Fed telling everybody they are going to raise rates. Now there's, I think, an 80% chance they're going to raise rates based on the federal funds priced into that 80% chance in March. So here we're coming up. We'll see what happens. I do think that this is just a little relief rally as we've had a big move down. I think we'll continue to sell the highs. From a long-term perspective, this thing is going to go sideways to down. And that is my 2 cents worth.